Real estate abounds in myths and misconceptions about what works best and where you should buy. Today, we're going to set the record straight. I'm Tim Graham, and the Property Playbook starts now. Most wannabe investors never get beyond one or two properties, and the key reason for this is they often buy in the wrong places. News media often misleads about where you should buy for the best growth. Today, I'm joined by Hotspotting founder Terry Ryder, who's got over 4 decades of experience in researching the best places to buy. Terry, thank you so much for joining us.
Always a pleasure to be here talking about real estate.
That's the way. Well, let's talk about some of the biggest furphies in real estate that you've seen over your decades in real estate.
There are so many myths and misconceptions in real estate about where you need to buy to get the best capital growth. Like you have to buy in the biggest cities to get the best growth. Like the cities have better growth than the regional areas. You've got to be close to the CBD to get the best growth, or that houses on land always outperform apartments on capital growth. Now, none of those things are true, but they're widely held beliefs by a lot of people out there still, despite all the research evidence that none of it's true.
Why is it pushed out there like that is the truth?
I think there are practitioners who don't have an in-depth understanding of real estate who perpetuate these myths and misconceptions. Economists, including those who work for the big 4 banks, they have a very thin understanding about real estate. They should be better at it than they are, and they tend to talk in generalisations. They talk about the Australian property market, they talk about what's happening in Sydney prices, and they often get it very wrong with their forecasts because they don't have that in-depth understanding of what works. And so those misconceptions persist that, for example, down market areas aren't going to give you good capital growth because they're stigmatised, and sort of places to avoid if you want to get the best growth. And the good news for investors, because most investors can't afford to buy in the prestige areas anyway, the good news is that some of these cheap areas are the places where you get the best growth.
Okay. Well, let's talk about some of the results over, I know there's no Australian property market, as you say, but over the last 20 years, where have some of the best performers been?
Well, PIPA, which is the Property Investment Professionals of Australia, did some research that was published last year, and it looked at where in Australia had we seen the best capital growth over 20 years, and they divided Australia into 8 capital cities and 7 state and territory regional markets, so 15 market jurisdictions. The best performer over 20 years, regional Tasmania. Now that would surprise a lot of people. If you had 100 people in the room and asked them to guess who had won the capital growth battle over the last 20 years, probably no one would get that right.
Well, I suppose it depends if you were in the room or not.
Exactly. I would be asking the question. So regional Tasmania actually grew 230% in 20 years. It means property prices tripled. Adelaide came second, Hobart third, Brisbane 4th, and good news for long-suffering Victoria. Regional Victoria was actually 5th, so not performing at the moment, but long-term it's been a very good performer. And so those big city markets like Sydney and Melbourne, they were well down the pack. And the places that perform best were the smaller capital cities and some of the regional areas over time. But it's a very different picture when you look at it at different time frames, but that's what the long-term picture has been. So those people, for example, considering regional Tasmania and looking and say, well, it hasn't performed very well in the last couple of years, we think it's a good time to be getting in the market when the market is flat, provided you believe that Tasmania's got a future, and we think it does. But knowing that long term it's been the best performer in the country. Yeah,
interesting. I've heard many people say in the past that the best markets in 3 years' time are probably flat right now.
Yeah, that's right. In fact, we printed that quote in our Week in Real Estate newsletter just a couple of weeks ago. It came from Simon Presley from Propertyology. He's one of the best analysts in the country, and he did make that quote that don't be worried if the market's flat now, because the best performers 3 years from now probably are flat now, because markets do move in cycles, and there's not a national cycle. Markets are very local in nature, and so there's, at any one point in time, there's markets that are booming, markets that are flat, markets that are falling, or markets that are moderate growth. So it's picking the right place and the right time to buy in the right place that's the key, I think.
So, I mean, a multi-speed market in Australia is the norm, but why is it? Why is it that we don't all move in the same direction at the same time? Why are markets so cyclical?
Because it's real estate's really local, and it all depends on what's happening with the local economy. It's not doesn't matter what's happening with the national economy. What's happening with interest rates can be irrelevant most of the time. It's about what's happening in the local economy. Is it growing? Is it diverse? Is it creating jobs? Are people going to live in that place? is infrastructure spending happening. That's a big one that we look for. And so if all those things are in place, we start to feel confident about recommending a location, because these are the places that outperform over time.
Okay. Well, we've talked about 20 years. Let's talk about something a bit more recent, post-COVID. What are some of the markets that have done well since COVID?
Yeah, but because it's 5 years since COVID struck in Australia, some of the big research houses like PropTrack and CoreLogic are publishing what's happened in the last 5 years since COVID, which areas, which locations, which towns and cities have performed the best in capital growth. And again, the results would surprise a lot of people. I'm quite certain that if we put that out to the audience of 100 people, which town or city in Australia was #1 for the last 5 years, no one would get it right. No. A lot of the places that outperformed were actually in regional areas, and a lot of them were places that many Australians may not have even heard of, let alone know much about. But the top 10 were all regional. The top 20, 18 were regional, and overall the regions had grown 56%. While the cities grew only 34%. So that sort of puts to bed that myth that the big cities outperform the regions.
Would there be an argument there coming from a very low point to begin with, though?
Well, certainly coming from a lower base, certainly, but if you're an investor who bought in these places, you don't really care. What you care about is the percentage growth that you've got. And the best performers on these lists that have been published recently, the best growth in 5 years, they've pretty much doubled in value in 5 years. Now, as an investor, you'd be happy if you doubled in value in 10 years. To do it in 5 is exceptional performance. And the #1 place for people out there desperate to know is actually Murray Bridge in South Australia. And I'm happy to say that that's a place that we've recommended in our reports over the last 3 or 4 years, because we could see the potential. Affordability was part of it. Good rental yields, low vacancies, a vibrant economy. #2, another surprise for many people, Kingaroy in Queensland. A lot of people probably don't know very much about Kingaroy, but it is a market that we've recommended in the last 2 or 3 years, and we've done a comprehensive report on that area. There's a lot happening in Kingaroy. It's #1 in Australia for a whole heap of things in terms of production of peanuts, pork processing, all sorts of strange things, but it's quite a vibrant place with a lot of...
Have the Inland Rail going through there too, or nearby?
Well, it goes to Toowoomba, which isn't too far away, which is an advantage for Kingaroy. But there are other places. Queensland very much was the predominant state on this particular list in the top 20. Lots of Queensland locations, regional. Places like Warwick, Bundaberg, Maryborough, and some of those places people may not have even heard of, but they've been performing really well because they're affordable and there's action in their local economies. South Australia did really well as well, and again, it often doesn't feature in the national conversation about where best to buy, but places like Murray Bridge, Mount Gambier, and we've been advocating these places a lot because, affordable, great potential for growth. Port Lincoln, Victor Harbour, the Iron Triangle towns like Port Perry have also done well. And the other place that stands out is also, of course, Western Australia, regional Western Australia, Bunbury and Geraldton, those sorts of places.
Okay, so we've talked a lot about the regions. What about the capital cities? Where's been performing in the capital markets?
Yeah, it's interesting to look at that too, because if we look at Greater Sydney, for example, the last 12 months, according to the generalised figures, house prices have only grown, say, 2 or 3%. And it looks like, at face value, there's been no growth to be found in Sydney. But if you look behind that and get down to local areas, which, as we say, is the most important thing, you see this means some fantastic performers like the city of Canterbury Bankstown, for example, one of the more affordable areas in the Sydney market. Certainly for units, it's a very affordable market, well located, great infrastructure, and people have been buying there, and some of those locations have grown 15 and 20%.
One of the other furphies that we've been talking about in the past is these places that have got lower socioeconomic stigma or higher crime rates. Is there a connection between those figures? Because I know you don't report on them in the hotspotting reports.
No.
Is there a reason for that? Is there any connection between crime rates, socioeconomic stigma, and real estate growth?
Well, no, there's not, and that's why it doesn't feature in our hotspots reports, is because it really...
I think it'll surprise a lot of people.
That's right, and I get asked that question a lot when I'm talking about location. They say, what's the crime rate there? And I say, I don't know, we don't care. Locations that are stigmatised and down market, people assume they have high crime rates. It's not always the case, and I'll talk about that point in a moment. But whether they do or they don't, it doesn't matter. People will buy where they can afford.
Yep.
We might all aspire to live in the Turaks and the Mossmans of this world, but most people can't afford it. They buy where they can afford, provided that ticks the basic boxes: schools, shops, public transport. We can afford to live there, this community. And some of these down market areas provide all of that, so people buy them. Because of the weight of demand, prices rise more there than in other parts of the city. So in Sydney, for example, suburbs like Wiley Park and Lakemba, down market, stigmatised to a certain degree, yet whereas Sydney only grew 2 or 3% in the last 12 months, these places have grown 15, 20%. Vacancies are about 1%, rents are up 10, 15%. People do want to live there, contrary to the belief that some people have. Southern suburbs of Brisbane, one of the best performers in Australia, have been small units in Logan City, and suburbs that are stigmatised like Slacks Creek, Logan Lee, and there's quite a few of them, and it's one of the most affordable part of the Brisbane market, and small units.
You could say the same of the northern suburbs of Adelaide too.
Absolutely. Probably over the last 5 years, in the capital cities, the best performers in Australia have been those Elizabeth suburbs. There's 8 suburbs with Elizabeth in the name, very down market. A lot of people fear to tread there, but they've performed massively well. Prices have doubled in 4 years. I just want to make the point about crime. Melbourne's got a crime wave at the moment.
Sure do.
As you well know, and there's burglaries, car theft, home invasions. It's not happening in the cheap suburbs, it's happening in the expensive suburbs, presumably because that's where the best pickings are.
That's a really good point.
Yeah, so the assumption that the cheaper areas, the stigmatised areas, have the big crime rates isn't necessarily true.
Well, I've got one more for you. Houses versus units. You know, there's been the furphy that you have to buy houses with land in order to get growth.
Yeah.
What are your thoughts on that?
Well, over history, that's probably been true. And if you look at the historical numbers, that's what it tells you, but it's changed massively in the last 1 to 2 years, and we're very, very strong on this point. This is great news for young home buyers. It's great news for young investors who can't afford the housing market in a particular area. You can get into a location much cheaper in the unit markets. You get a much better rental return. The only thing that you need to know is that whether you're going to get capital growth or not. And what we're seeing in the last couple of years is this huge shift in the dominant paradigm in real estate. So now we're seeing units outperform houses on capital growth because of the weight of demand for various reasons. So in the last 12 months, according to CoreLogic, 60% of the suburbs of Australia, units outperformed houses on capital growth, and in Brisbane it was 87% of suburbs. So we're seeing a huge turnaround there, and I think it's a trend that's got longevity. I think it was here to stay because there are so many buyer cohorts choosing attached dwellings for affordability, or for that sort of low maintenance lock up and leave lifestyle, or for safety. We've just been talking about crime. People feel safer on the 6th or 8th floor on a building with security features than they do at ground level. You can't have a home invasion when you're up in the high levels in an apartment building, presumably. So there's all these reasons why, and there's downsizers as well. A lot of people who are older and the kids have grown and they're rattling around in the 4-bedroom house, so they sell that and they downsize to a quality apartment. So there's all this demand coming into the apartment market now, and that's why capital growth is now performing.
Very good. Well, I think we've dispelled a few myths today, Terry.
I certainly hope so, because it's such good news for investors that you don't have to spend the big bucks to get the best growth. You can actually find the best growth and the best rental yields at the lower end of the market. That's great news for first home buyers and for young investors.
That's the way. So keep your eyes on the ugly ducklings, folks. That's the play for today. This program was brought to you by hotspotting.com.au. This is Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.